spark industry disruptions, only the companies that can adapt survive. Well, now there's an ETF, ticker XOUT, that has the goal of eliminating holdings that could be ripe for disruption. And joining me today is the CEO of that ETF's index provider, and that's David Barse of XOUT Capital. Thanks so much for being here today, David.
It's wonderful to be here. Thank you.
All right, so give us a quick little premise of what the index is really going after.
Yeah, look, there are two primary focuses. One is the most important or significant forward-facing risk that all investors and companies are facing is technological disruption. And if they don't think or focus on that, that's a big problem. And the second thing is we've come up with a strategy that's something intuitively simple, but no one's doing it, which is it's more important what you leave out of your portfolio than what you leave in, thus the name XOUT. So we're eliminating those companies that are or likely will be disrupted by technology from a broad-based index, and our first index is the 500 largest companies in the U.S.
Right, and let's dig a little bit into the methodology. So what line items are you really looking at and you're honing in on that are the signifiers for what's in and what's out?
Yeah, so if you think about technology and what it might be doing to disrupt companies, there are things like growth, hiring, capital expenditures on business, what the analyst community might think about a business, whether that company's profitable or not, whether the company's investing in its own stock through buybacks. We use a multi-fundamental economic measurement to create a score. And the bottom 250 companies that score get eliminated from our index.
Right, and with the focus being fundamentals, have you, or in creating the index, did you consider at all adding in price performance as one of your metrics, and why is that left out?
Yeah, we have a management factor that we call it that has price performance as its key indicator for us, because how else to judge a CEO, for instance, who's running a business, than the price of the security at which time he or she takes over the company to the present day, and you compare that against all the other companies in your constituency. So we use price performance just with a slightly nuanced manner.